construction projects going on here. I got some really cool stuff I can show you guys as soon as we get everyone on.
Sweet.
Briefly, like we won't take too much time doing that. But.
Yeah. Marty and Max, or just Max?
Yep, you got both of us here.
What's up, Marty?
Good. How you doing, buddy?
Good.
I didn't even realize I was on mute, so I took us live. So pretty much people are starting to come in. We got a couple of people already with us, and it looks like we'll have a little bit more coming in now. So Doug, you're on your way, you said, from Florida. Did I hear you right?
Yeah, I'm actually in Florida right now. I'm going to be in Florida for the next probably week or two, and basically down here with my family, but also doing some business as well.
Nice.
And traveling and whatnot.
Nice. Working on some projects out there?
Say it again?
You doing some real estate projects out there?
Yeah, we do have a couple actually in flight right now, and then we have one that we're buying. Hopefully, should be closing coincidentally tomorrow. Actually,
nice.
We have one.
Good luck.
Thank you. We have one in Newport.
Doug, I think you just went silent on us.
Yeah, a little bit. Yeah.
All right. Well, let's get started. So guys, hello Zoom. Hello to all our attendees. Thank you for joining us. We're really excited to dive into leveraging yourself, obviously in a specific market, which we're all in right now, which is almost post-COVID. You know, things are starting to open up. You know, work is being done. Offices are opening. So a lot of good news around the board. We have with us Phil, who's a construction manager, who we'll get into more detail with in a bit. We have Doug Beck with us from JDL Ventures, who pretty much does everything in real estate, you know, whether you're doing wholesale, investing himself, mentorship. I mean, he's kind of a one-stop shop and someone you definitely want to speak with when getting into your real estate project, whether you're fixing and flipping or buying and holding. And then we have Martin Chera from Express Capital Financing. You know, lucky him, he has a nice son like myself. But we pretty much run Express Capital Financing. What we do is we leverage, you know, investors' money and capital, enabling them to diversify themselves into multiple different projects, you know, creating more revenue, more return on your investment, and better investments. So we're gonna dive into it pretty deep. First off, I just wanted to introduce Phil a little bit more. So Phil, I mean, you've been in construction, you know, for a pretty long time, if I'm not mistaken. I think you said about 20 years.
Correct. Yes.
Yeah. Wow.
That's
so,
right.
I mean, you know, based on what we spoke about, I mean, you have a pretty intimate knowledge of, you know, every step in the real estate development deal, whether it's buying land, negotiating, zoning officials, permits, managing the labor. So you pretty much do it all, right?
Yeah, absolutely. Yeah, that's correct. Uh-huh. Yeah.
Awesome. So I guess just really quickly before we go into, you know, leveraging and all that stuff, you know, I guess give us a little couple of bits, you know, of what your day-to-day looks like and what you do when you're working with investors.
Okay. Well, again, yeah, thanks for the introduction. Yes, I'll take you kind of through some point, right? So we typically, I'll receive, let's say, a scope of work and address from an investor, and they'll ask me to take a look at a property for them in terms of construction. So I'll go out there myself. I'll take a look at the property. I'll tweak that scope of work because, as we know, a lot of times we'll receive a scope of work from maybe a wholesaler, whoever it might be, that may be missing some key points. So I'll take a look at it. I'll tweak it. Like I said, I'll get that back to the investor. With a price. So, typically, I understand, profitability because I'm also an investor myself, right? So, I try to keep the prices as low as possible. So I work with, I would say, at least 50 other contractors and subcontractors to be able to facilitate numerous projects at a time. And we're able to save money in that way by utilizing those people on multiple projects, keeping them busy so they keep costs down for us, and we keep costs down for you guys. So that's the starting point. Once we get into the project itself, we use different platforms to keep investors involved and informed of where we're at day to day, whether that be pictures, documents, permits that were approved, or unfortunately sometimes they're failed, right, or inspections. So we keep the investor informed with a timeline, a Gantt schedule, draw inspections. That way you feel comfortable. I know a lot of investors have day jobs, so it may be important for them to not be a project manager of a construction project or of their own flip.
Right.
So that's something that I provide for investors. We facilitate that for them so that they can continue with either their day jobs or finding the next deal, right? Because that's important to people to keep moving.
Time is money.
Yeah, exactly. So that's a little bit, but I could talk about this a lot.
So let me ask you this, Bill. So, I mean, obviously it's a mouthful what you do. So what's left for an investor to do when they're working with you? What's still in their hands, and what are their responsibilities?
Well, I mean, I could say we have a lot of different investors. We have some investors that like to be involved. They like to give their input on, let's say, the finishes. And that's totally fine, right? It's their project.
Right.
But then we also have some that are like, listen, just get it done. Let's get it on the market. Whatever you think, I've seen your product before. I don't even want to talk about it. Just get it done and let's get it on the market, right? So it just depends. We can tailor that to specific investors, depending on, if they're passive or aggressive or active. Yeah.
Right. Awesome. So it sounds like pretty much anyone that's interested, is pretty much you're able to work with them and find a way to make it happen. And that's awesome, honestly. It's, we're talking about leverage, so we'll go into it a little bit more. Everyone, it's so important, not just on your capital side. We're always thinking leverage equals capital and making sure that you're using other people's money. But what about other people's time? That's something that a lot of people forget about and don't realize that, yeah, sure, there's a cost for somebody else's time, but what is that getting me? What am I able to do with my time now, and what could that make me?
Right, absolutely. So and that's really important, because I know that a lot of people, from what I hear, right, I've been in construction my entire life, and then I started, my father's a general contractor, right? So I started at a very young age. I started on my own about 20 years ago. So but what I hear, a lot of people that get into real estate investing, they typically, where they tend to have a hard time or even fail, is in the construction process, because being a construction professional requires either a lot of experience or a lot of school or a combination of both, right? So becoming a contractor or a construction manager overnight is probably something you're not going to do, or it's not going to happen. It's either going to be from trial and error and potentially a lot of wasted money. So I think that, utilizing someone either like myself, or someone similar to me will save you a lot of time, a lot of headache, a lot of money. We all know that other contractors can, there's a lot of discommunication, whether it be a language barrier or it be just whatever it may be, right? To where you could lose a lot of money. So having someone like myself in the middle as almost like a liaison will really help you get your project to the finish line without a lot of hiccups.
Gotcha.
If that makes
If I could just jump in for a second, so you guys hear me okay? Because I'm on the road right now, so.
You're fine.
Perfect.
Just a quick heads up. That's Doug Beck, who I just mentioned. So he's a wholesaler. He's also involved in
Title
company. He does
fix and flips,
mentorship, whatever you need. So Doug, please go ahead. Tell us what you were saying.
Yeah, I think I got cut off earlier because my phone probably switched over to Bluetooth or something like that. You probably might not have been able to hear me. But yeah, Doug Beck here. Phil is someone that I respect highly from a construction standpoint. And also, like you said, he's also an investor himself. So he and I each other a few years ago, but ultimately my business started as a wholesale company like you guys just mentioned, and that business is still in existence. We still flip contracts to other investors. We have other investors buy and also learn how to buy, fix and flip, as well as buy and hold. But also over the years, we've evolved to where now Douglas J Development, our renovation company, essentially, and our redevelopment company has grown to where, we've done a few dozen projects successfully. And Express Capital has been an instrumental point for us as well, from being a lender, a hard money lender, to help us, leverage like we talked about. So I think we should talk about that tonight as well. But just to build off what Phil said, I can speak from personal experience, and that's one of the things I was hoping to talk about tonight, this evening here, would be, when you start a project on your own and you attempt to hire a general contractor, even that's someone that's going to be a liaison, like Phil mentioned, a general contractor, first off, they don't come in all the same, expertise and the same sort of acumen as far as how to run a construction project, or even that, for that matter, a business. They don't understand the business challenges with money and how money flows, especially when you're using hard money. So for those of you out there that are doing already business with hard money, you know that there's going to be draws involved in construction, draw requests and such. So the good news with somebody like Phil and with us at Douglas J Development is that we understand all that. We are investors and buyers ourselves, and we understand the challenges as far as the speed to get things done. I'll share a quick story to start the conversation for tonight.
Yeah.
I think in the past or so, we probably spent about $300,000 or so in construction. And that's mostly from in construction, it's a good thing to spend a lot of money, because if you have projects that need to have money spent, the longer it takes you to spend the money, the less you're going to have the time to sell the property, or the longer it takes to sell the property, excuse me. So in other words, if I spend, let's say, $300,000 in a year for the same X number of projects versus spending $300,000 in 2 months or a month, obviously I can now sell more property more quickly and therefore get more profit essentially in the same period of time. So what I'm getting at is, when those of you out there that are scaling, if anybody has multiple projects, I would like to know if folks could contribute. I don't know if you said that already, Max or Marty. If people can just comment, anyone that has multiple, like 2 or 3 projects or more going on, I'd be curious to know if anyone here has that. Right now we have about a dozen and a couple extra, like probably 13, 14 projects going on. And I'm only saying that to understand that without Phil and without the team that he's able to put together and such for our company, it wouldn't be a possibility for me to travel to Florida and be able to think that everything's running smoothly and have Phil in my corner as essentially a partner in the projects here to run the projects successfully from a construction standpoint. So I think it's important for folks to know that you start off maybe with 1 or 2 projects. You can grow with Express Capital, hard money lending, and private money investing and such. But like was mentioned earlier, I have firsthand experience. In 2018, we had, I think, 15, 16 projects going on simultaneously, and it was very aggressive purchasing on my part. And I had 3 people that were helping project manage, but they weren't as experienced, nearly anywhere near experienced what Phil has, what he brings to the table, with decades of experience. And unfortunately, some of those projects fell to the wayside and didn't do so well because of that. And so we had timeline issues. We had construction overages. We missed the parts of scope of work that we should have obviously known in the front part of the project. But going through that challenge and going through those challenges taught me to reflect a little bit and look back and say, where could I improve? And I said, construction is really the biggest weakness we had at that time. And so what we did is we looked out there. We said, who do we know that knows construction better than we do? And Phil was the first guy that came to mind, actually. And towards the end of last year, we sort of formalized it. And Phil is officially, my director of construction for Douglas J Development. He has his own stuff that he does as well, but we're looking to synergize more and more. So just want to share the story with everybody that, if you're out there doing renovation projects or looking to do renovation projects and you're not sure about the construction side, it's not always more expensive actually to leverage someone like Phil's and my experience. In fact, we can make it less expensive, so we can talk about that as well, how that works, not just from the direct costs, but also the indirect costs. Okay.
And I just want to add something, everybody, folks out there, mid-COVID, jobs are scarce. People probably lost their jobs, want to seek a new employment somewhere. Maybe they want to downsize and they have to focus on downsizing. So with that said, it is in everybody's best interest to hire a company like Phil Doyle's company, who could not just be the management, the construction management company, also the consultant, and handling all your needs. So just like Doug was saying, he's a flipper, he's an investor, he's a holder, and now he's in Florida and he's got a good construction management company handling all his projects, so he could focus on what Doug does best, which is buying, selling, and fixing and flipping. So to put that into everybody's perspective today, whether you're new in the business or, unfortunately you're looking for a new job or to downsize or you want to focus on selling your house or something like that, better to give it to a management company or construction company who could handle your job professionally. And look, not everybody could be a flipper, a buy and holder, a contractor, and do everything on the deal. So your best bet is to give it to professionals who could handle it and get the job done, because it's all about the profits, not about your time.
Yeah. And Marty, I appreciate you saying that. So just to build off that a little bit. So you reference, and I appreciate you bringing up like the fact that I'm involved in multiple different kinds of businesses with respect to title insurance and also brokerage and such. The thing is, like, I appreciate that, and I am proud of that, but also keep in mind that I'm not foolish enough to think that I could run all those businesses by myself. And so I have to give kudos to my partners in those businesses, Ken McCarthy, Darren Giroux, and also in this case, Phil Doyle with Douglas J Development. So these guys, they're really the bread and butter, the boots on the ground, so to speak, and the daily operations management team, if you would. Also, quick kudos to Rich Lenetsky as well. I think he's on here. He's helping run JDL for me as well, doing a great job from our wholesale side and also mentorship and education division. So I'm just honored to be here, be able to share some stories with you guys and bring some perspective to things. But these guys, the ones that are involved in the daily operations, they're the ones making it all happen. So I appreciate my team.
Absolutely, and guys, not to pat him too much on the back, but there is a lot that we could learn from someone like Doug, who does leverage himself at the maximum ability possible, whether it's hiring. I mean, I've attended so many events that we've hosted together that we've, educated, and, even some that I was just attending because you were educating. And between, using different systems out in different countries, whether it's, virtual assistants and whatnot. So you really understand your niche. And this is what I want to get at, is that everybody has their niche. Phil has been involved in construction his whole life. He knows construction. He's not going to try to attempt to do something for another 20 years and learn it all over again. Well, yeah, he might be involved in it and get that and learn from it and be able to put new experiences and play from it. But he's trusting the professional that does this every day, day in and day out, that knows the ways, the tricks, the trade, and allowing them to do it, the best way possible for the project. Because at the end of the day, it's not about, us being able to say that, oh, I did everything myself. It's about us being able to say, hey, this is the portfolio I built in 5 years. This is the portfolio I built over the next 10 years after that. So we want to keep spending that money. We want to keep other people also busy as well. Like Phil was saying, it's important to keep your sphere and your team close, because they're the ones that are having your back. So I guess, let's talk a little bit about that, having a team, because, if you ask me, that's one of the best things you could have when it comes to leveraging. So, Doug, tell me a little bit more about, who an investor should have in their back pocket, why they're important, and how they could use them in leveraging their deals.
Yeah, great question, Max. So I think it really depends on a couple factors. So I would say anybody out there who is a working professional, you're going to need a lot more people to reach out to that may not be a part of your direct team, but maybe an indirect part of your team. In other words, you need to build relationships with people that can source deals for you. You need to build relationships with people that can help fund deals for you. You need to build relationships with people that can help run projects for you, because frankly, if you're out there working full time for somebody else and hopefully making some good money doing that, you're going to need to be able to leverage your time for sure and work off a limited schedule of time. So that was kind of my story in the beginning. I used to work at Johnson & Johnson, and I was working, 10-hour, 12-hour days sometimes, 5 days a week, sometimes in the weekends as well. I had some flexibility, but it was still grueling. And so in the beginning, I started off on a part-time basis in the evenings, weekends, basically. As I quickly built up a small team of people, mostly of which were virtual, based in different parts of the world. And then little by little, we grew, and we got some people locally, and we got some more people locally and some more people virtually. And I started forming partnerships and such. But it starts with one person. So I think the most important question anybody that's listening to this conversation should ask themselves is, where do they think they have the biggest weakness, or where do they need to either that, or where do they need to amplify their strengths? In other words, if you're already strong at sourcing deals, why haven't you put a deal together then? What is it that you're missing? Is it a level of certainty? Is it a question of the deal making sense? If you know that you have a weakness, like you don't have any time, then how are you going to supplement that And how can you reward someone for supplementing your time? Can you bring somebody on a performance basis and give them a piece of the deal just for helping run that part of the business, as far as sourcing a deal or running deal analysis or putting together a funding scenario for you or reaching out to people, whatever it is. So, in our business, we have, in the wholesale side, we have acquisitions, which focuses on sourcing deals and bringing together both deals directly with sellers as well as real estate agents and inclusive of wholesalers as well. So we kind of put that all into one umbrella called acquisitions. Then we have a separate team called dispositions, which is a small group of people in our office that essentially help get rid of those deals that we get under contract to wholesale those and flip those to somebody else. That's in our wholesale side of the business. There's some shared resources that we have in our business that help educate and mentor as well, in addition to myself, of course. So that's like a separate little sort of niche for us, I guess you could say, being that we have some experience. But then if you flip over to the development company, it's really three simple parts, which one is going to be acquisitions again, because we have to find an opportunity to buy. The second part is going to be funding and sourcing funds for deals, whether that be through hard money lenders and also private money lenders and investors. And the third part is running construction, really. Besides that, you just have to know how to hire a realtor at the end that makes sense for that particular project and that particular location. So if you know how to figure out those three parts, acquisitions, money, and running construction, that's where, if you have those three things, at least a person, a point of contact, or a company you can reach out to for those three things, you're kind of set up for success right off the bat. So again, depending on where people are the weakest, I will tell you, shameless plug for the folks here, JDL Ventures can bring you deals. Douglas J Development and Phil and my team can help run your construction projects for a fee or for a JV partnership, depending on the scenario. And Express Capital can fund your deals, the majority of your funding that you need. So you have really all the resources you need right here in front of you today. So I think I'm encouraging the folks that are participating today that catch the replay of this to ask your questions, to interact with us and share ideas and questions you have, because we can help you put together your first or your next deal right on the spot, really, in this conversation we're having today.
Absolutely.
I just want to add, Doug, to what you're saying, by the way, but Phil also. I'm an investor for 25, 30 years. I mean, I used to do 1-4s, fix and flips, and now I do multifamilies. But I always tell all my investors and my clients that what's the most important aspect of the deal is not the capital, ain't the title, it's not the insurance, and sometimes it's not even the property, the location. It is the contractor. The faster you get them in, the faster you get them out. The cost of money is cheaper, your return is greater. If you can get them out a month quicker, your taxes, your insurance, your carrying cost is just 30 days less money, and that could be $2,000, $3,000, $4,000, $5,000, and that could be equate to a 10, 20% greater return. So not to pat you on the back, Phil, but it is important to have a good contractor behind you who could execute the job, tell you if it's worth to spend 50 grand and you're going to get a 300 ARV, or to spend 100 grand to get a 400 ARV. So that's what's very important about hiring a good contractor. And by the way, of all the folks that are newbies on there, you want to have a resource of all types of vendors, whether it's title, insurance, lenders, and again, with the contractor, if you have 10 jobs going, or 5 jobs, or 3 jobs, wouldn't it be pertinent to you how to have one contractor or consultant handling all your 3 deals at once, instead of calling Mo, Larry, and Curly and worrying about, where is he at and where is he up to, and this guy's slow and this guy's not doing his job right. Now you got one guy to question and answer to and get your job facilitated. So the most important thing is not the money. It ain't the cost of the money. It's the contractor, getting them in and out as quickly as possible with the right, obviously with the right product of good.
Yeah.
Yeah, there's no doubt about that. We've all seen it. Contractors can make or break a deal. And, it definitely is important, have people that you can talk to, and even just ask questions here and there. Now, Doug also did mention one thing that I do want to say, guys, do ask your questions. We're making this very interactive. So, if I see the question is a little bit off topic, I'll save it for the end, but I'll still ask it. But obviously, if it's something to do with what we're talking about, I'll go ahead and open it up for everyone to hear and see. So just use the Q&A box, use the chat box, whichever you prefer, and I'll be going ahead and spreading them around. But for Martin Chera, so tell me a little bit more. I mean, we're talking about leverage. Obviously, lending is sort of like the top of the triangle where everyone talks about leverage. So if you could, I guess, if for someone who's never done a deal before, they've never borrowed, money before for a property, this might be their first deal. How would you explain hard money to them in the simplest terms?
Hard money is quick, it's easy, it's short term, providing you high leverage, low deposit, low risk. And the less you put down on a deal, the greater your return on the investment is and the greater your profits are. So that's what hard money is used for. It's used for a fix and a flip, where it's short term, 12 to 24 months, depending on the project. And like I said, providing you with high leverage and a low risk. Better to put down 20% on a 100K deal, which is 20 grand, than to put down all cash, 100 grand on the purchase and whatever the rehab is. When any type of an investor or client is ever telling me, I'm going to take all my cash, I don't want to pay 12% and 2 points right now mid-COVID, I'm going to take all my cash. I tell them, why do you want to maximize your risk? Why do you want to, you're not diversifying. And when you're putting all your money into one deal, you're at a 50% default rate. If God forbid the deal goes sour, you could lose all your money. So better to take your capital to put into to many deals. But that's what hard money is, a quick synopsis. It's a very quick and easy process. It just takes us 15 minutes to analyze your deal, pre-qualify a customer, get them, letting them know their rates, their leverage, and their terms. And we could provide resources if you don't have all the capital, whether it's us that'll do the 100% financing for qualified buyers, or introducing you to gap funders or other investors who have cash and don't want to sit there and do a deal, but they just want to make a return on their money too. So we have all types of investors and clients looking for all types of things, and we could help them with our resources and of our products and our programs.
And I'll just jump in and say one thing. This is Doug. So Marty and Express Capital has been instrumental. Again, I'll reiterate, helping us, do a number of projects. I think we did at least 5 or 6 loans together. Hopefully more to come. But I would say, we're one of those people. I'll put it out there again. First mover advantage here, saying that we would love to use Express Capital to fund our next hard money deal, and also bring some capital to the table for somebody else who's looking at JV. Someone here is looking at joint venture. I'm happy to bring some of Douglas J Development capital to the deal. So backstory to that, we have a number of investors, financial investors, that want to get involved in projects financially, but don't have the experience, nor do they want to get involved in a day-to-day. And we're what some people would call an operator, essentially. An operator meaning running a project, getting it done from start to finish successfully. Marty and team financially leverages money, like where we can borrow it, and then we would then bring capital, whether it's our capital or a combination of investors' capital, to a deal, and then operate the deal, and then hopefully profit together where we can make money and everyone wins. So I'll just put a plug out there again for everybody who's here. Anyone's looking to joint venture with the team that's seasoned and experienced, and also leverage and Express Capital's money with ours, we're happy to consider that as well.
So for anybody, that's just to clarify what Doug is saying. If you don't have the full 20% and you're new, Doug will joint venture with you because he's got the capital and he's got the experience. So that's a good thing to know, and we can introduce you to other people as well too. But that's good because everybody wants to get into this real estate industry. Everybody wants to start making money. I always said that when there's a recession, it's millionaires are made, and when there's a depression, billionaires are made. So right now, when there's uncertainty, there's opportunity. This is the perfect time to buy, when prices are low and there's opportunity out there. So I just want to bring it out to everybody. Just to let you know, right now, mid-COVID, 1 to 4s, we're at 80% of the purchase, 100% of the reno, not to see 65% of the after repair value. And I'm going to tell you this very honestly and very transparent. Anybody can give you money, whether it's me, my company, Doug, your mother, your father, anybody can give you money. But having a relationship lender that has your back, looking over the deal, making sure it's profitable, showing you the return on the investment, your profits, and letting you know with our consultative approach of where the market trends are going in that area is most important. Because I have clients who are making $5,000 or $10,000 on a deal and they want to jump on it. And I say, I don't like it. And here's why, A, B, and C. And you want a lender that can give you that transparency and honesty. I'm not looking out so much for the deal. I'm looking out to make sure that an investor is going to be successful with the profits and by exiting safely to make those profits.
Awesome.
And guys, I'd like to add this really quick. So my first deal I actually bought from Doug, and Marty funded it. So
Look at that. I forgot that.
I don't even know
I forgot it too.
Yeah, I don't know if you guys know that, but yeah. So and I can say, as far as the transaction was very smooth. So in terms of if you go and you work with us, obviously I'll handle the draws, but everything was very smooth. So I had no hiccups, no no stalls, no delays on capital moving in our direction. So the project moves smoothly. So
it's important about the relationships. It's important for, like I said, any product or service, title, contractor, for that vendor to answer the customer's questions, even if it's a text, an email on the weekends. And I'm sure even Doug has texted me on a Saturday night at 10 o'clock asking me about a deal. Can I do this? Can I do that? I answer. You know why? Because I'm here to help the customer define, should he move further or not? Should he make an offer or not? Should I call my contractor or not? They want answers, and they want to know if a lender, Express Capital, whatever it may be, can fund the deal, or, when a bill, do some type of alternative or creative financing. And that's what's important to know. So that's that, Max.
Yeah, Marty's always there. I will say that you're one of the few lenders that's super responsive, and one of the few owners of a lending company. Because there's a lot of folks out there that, hopefully I didn't blow your cover down, but I think folks should know that, these guys from Express, at least people from my side, need to know that they're very, and that they answer their phones, they get back on text, and they're very reachable.
Right.
Absolutely.
I've had challenges with other lenders that are not local, let's put it that way. And even though they have potentially, their deal, their spiel, whatever, they're not necessarily as reachable. They're more difficult to work with. They don't get back to you and stuff. It takes hours sometimes for something that should take a couple minutes. It's just very aggravating.
And I just want to say, and I'm sure Doug and Phil, you'll agree that with this opportunity right now, unfortunately with mid-COVID, is a smart and an intelligent way to prospect leads is by providing, sending out 10, 20 or 30 offers. Why not send 20 or 30 offers out there where hopefully 1 or 2 or 3 will get accepted, and you could start to build your pipeline of wealth. Why do I say that? I'll provide you not just with a term sheet specific to a property, I'll provide you with a proof of funds for X amount of dollars. So this way you can go out to realtors, bankers, lawyers, wholesalers, wherever those deals are coming from, and you could execute 20 offers a week and come back with some nice deal flow. But for any newbies out there, I would say go slow, learn the process, do one deal. There's going to be plenty of opportunities. We're headed into a recession. It is unfortunate. And when a recession lasts, it's typically 2 years. We're slowly going into there. The market condition has not fully even, felt the pressure yet. As a lender, I'm watching the markets, the secondary markets, all types of mortgage industry markets. It's starting to opening up. It's starting to loosen up, but we are unfortunately headed into a recession. It's going to last, like every other recession, anywhere from 6 months to 2 years. So why am I saying that? There's going to be opportunities, whether it's today, tomorrow, or the next day, but do your due diligence. Go through the property, view it, maybe call up Phil, let him go view the property for you and with you, go over the deal, this, that, and the other. And of course, we'll crunch the numbers with you and for you. And just to let you know also, you can go onto our website, expresscapitalfinancing.com. There is something called a deal calculator. There's great questions there for you to ask your seller, your realtor, your FSBOs, things like that. They're great questions to ask, and you put the answers in, and you're going to have, from a borrower's perspective, if the deal makes sense or not. So I just want to, let you know those are important things to know.
Absolutely. So Phil, I have a question for you actually. So I've been thinking, obviously we know, Martin kind of explained a little bit of how the lending industry was affected by COVID. Has your side been affected at all? Has construction been affected, or are you seeing things just smooth sailing from here on out and nothing changed from, yesterday to today?
Well, I could say it depends. So I do facilitate projects for homeowners as well. So I can tell you that in a wide variety. So, your middle class and all the way up to your upper class. So all my middle class clients canceled on me, right? All my millionaires, they're still doing their projects. So if that kind of puts it into perspective, right? So yes, because I did lose about $2 million worth of projects in the pipeline, which, I was counting on to, obviously, make whatever I make off of that through the rest of the year. But I've noticed that real estate investors are kind of bullish, right? So I have more projects on that end. And again, the higher end clients they're still facilitating their projects. Yeah. Hmm.
How about the investors? Have they slowed down? Have they kept their projects moving throughout? Have you seen anything like that?
Not yet. I haven't. Not yet. I anticipate that it's. You know what? I don't really know. I think that, from a financial standpoint, I think Marty probably knows a little bit more about how that will trend. But as far as right now, I'm still going strong. But again, I had a lot of things in the pipeline, right? So we'll see what happens. I think people with money will continue to invest. Homeowners that have money will continue to renovate. I think we'll continue on. But I think it's a great time to invest in real estate, especially because there's going to be a lot of opportunities. It's unfortunate that, the reason why there will be opportunities, but there will be. Yeah.
Yep. Buy low and sell high.
Yeah, exactly.
This next question, I'm going to give both Martin and Doug a chance to speak because you guys are both going to come from a different angle. So how has COVID affected the real estate market? Are you seeing more deals right now? Are you seeing less deals? And what do you anticipate for, in a couple of months from now?
So from my perspective, we're doing a lot of deals in New Jersey, and speaking to my investors on a daily basis, they're telling me, most of them are telling me that it's still a bidding war. It's still a very scarce market and it's a bidding war. Some of them are losing deals. Some other states like Texas and Florida, the prices have gone down. So they're buying low and selling high. So it's just about what city, what state that they're focusing on. And just to reiterate just what I said before, for any newbies on this webinar, focus on your own back door. There is nothing better than your own back door. You know the streets, you know the city better than anybody else right now. Focus there to get started before you get a good deal in a different state that's an hour or two away, because you're not going to be able to focus and scale your business to another level. But like I said, some city and states are stable, some are going down. We're seeing opportunity in North Carolina, Texas. My investors are telling me that they're grabbing great deals. I will say that Craigslist, I'm telling my investors they could find deals on there because there are a lot of homeowners that can't afford that 6% realtor fee, and they want to just, it's a great opportunity to find off-market deals. Realty Track, Property Shark has right now a lot of listings that are people that are in defaults on their mortgages. So that's a great opportunity too. And I'm sure Doug could attest to this, that if you're home right now, which people are, why not do drive-bys? It's the perfect time. Look for high grass and doors that haven't been opened or closed, and newspapers and all kinds of out in the front yard where the property hasn't been touched, and go to your local website of the city and state, the county, and see who the property owner is and call them up and see what's happening. Maybe somebody died. Maybe it's an out-of-state investor. Maybe they just got it aired to them because, unfortunately, maybe their parents died due to this pandemic. So there's going to be opportunities. And unfortunately, it's not just deaths. It's divorces, people downsizing. People can't afford to pay their mortgages and they want to go into a rental. Now they want to go into a renting. So their houses are going to be up for sale. And that's why it's good for a buyer's market, because the supply and demand obviously is there right now. Before COVID, it was a seller's market. Now it is unfortunately coming to a buyer's market.
Wow, that's amazing news. So I guess Doug, share with us a little bit of your aspect. I know you're still a little bit all over the place as far as New York and New Jersey and Florida. So I guess tell us your experience and what you've seen happen.
Yeah, it's a lot of the same things that Morty mentioned a minute ago. I would say the supply and demand equation is starting to shift a little bit, but I think sellers, it's no secret if you look at some of the statistics of, like, I think there's a graphic from Showing Time, which is one of the realtor tools that shows the number of listings that were published on MLS in the past, whatever period of time. The drop off was like 2/3 compared, year over year, I think, from last year, from March, April, and May compared to this year. So, there's a lot of different news articles, similar to how anything out there in the news, you have to be careful what you read and what you believe and what you listen to. I think you have to have a pulse, like Marty's saying, about what's going on, because frankly, the statistics will show, for example, that they say home sales are down. Well, of course, if people aren't looking at houses and there's no listings going up, there's going to be less houses selling. but that doesn't necessarily mean that the home values are changing. The supply and demand equation is actually shifting in the favor of demand, in the sense that, or I should say, in the favor of us as sellers, not necessarily as buyers. I think personally. Well, I think it's two ways. Like, so here's what I mean. Like, there's really, if you look at it from the perspective, there's less supply for the same amount of people that were trying to buy before COVID happened for them to buy, because there's not as many properties on the market. So one way of looking at this is that there's less properties to choose from, or they have limited selection, limited supply, which means that price could technically get inflated. Now, the challenge is that's not generally happening, because the demand is not demand, meaning the buyers of the end buyers of the flip I'm selling, is not going to go out and look at the property. There's less of those people going out and looking at them. As soon as that's allowed again, as soon as open houses can occur and people can go out and look out like they normally would, I believe there's going to be a spike in the market. In fact, my personal opinion, based on just statistics and what's going on, it may be for sure a recession. I'm in agreement with Marty. He knows a lot more about the financial space, what's coming. But I think for the immediate future, for the next 3 to 6 months post, like when people can go back out doing what they had to do, I think you're going to see a spike and an actual increase in values in terms of reselling of properties. And then it's going to trail off and realize that at that point, maybe that doesn't help the economy, or there's not enough supply of money or whatever it is going to cause the recession to then occur, probably towards the end of this year into next year, my opinion. But what I see right now, I don't see anything other than there's still, like Morty said, bidding wars. There's still, people that are trying to sell properties, yes, but there's less sellers willing to sell. And there's also a lot of uncertainty, though. So the sellers that are willing to sell typically are like confused. They don't know if they're going to get the value that they want. They don't know if they're going to achieve the sale price that they were shooting for. That works in our favor as buyers for sure. But it also, you don't want to take advantage of the situation too much. You don't want to be unethical or unreasonable. But you have to leverage the COVID stuff when possible. And Phil knows we've had conversations about this as well, where we have to be cautious as buyers, even though there's going to be, I believe, an increase in demand when things open back up, because people still want to move. They want to get their, like, I'm actually, one of the things I'm doing, full disclosure, is we're looking possibly to relocate, so we're interested in doing that. We're not committed to anything yet, but I'm one of the people that's looking to move. So if I can't look at properties wherever I'm looking, I can't relocate. So if people have a reason that to relocate, whether it's work or business or personal reasons, like, they still have to relocate whether or not COVID's happening, right? And so the demand still exists. I hope I'm not going too abstract with this, but I think people need to understand there's still people looking to buy property. So bottom line is, we as buyers now, flipping it around as a buyer, not as a seller, because we sell and buy, right? We buy to renovate and sell, and then we become a seller. But as a buyer, we need to leverage the fact that COVID is occurring. We need to build timelines into our purchasing process, where, like, things that normally took a day or two might take a week or two, unfortunately. And again, this is not from any personal recent experiences with anybody who's here, but I'll tell you that there are some people in my network that take longer to get things done. Other lenders, other investors, etc., that have taken, weeks to do things that normally take a couple of days. And there's a lot of reasons behind that, but I just think we need to be reasonable with people. If you commit to buying with a seller, for example, their property and closing in 2 weeks, that might be overcommitting right now. So that's not the right way to win a deal, in my opinion. The right way to win it is being transparent, being reasonable, and letting people know that you're one of the few people out there still buying that can close. And so, like, I tell people in my network that we have, 30 days, maybe even 45 days to close from the time we go into contract, where we can get it done. There's definitely deals, I think, in the pipeline of what's coming, like to Marty's point, probably around becoming more of a buyer's market. I don't know that I've seen direct implications of that in our business yet. Like, I haven't seen an influx of deals that are so discounted that it's like, oh my God, no-brainer deals. Like, there hasn't been that yet, but I think that's coming. When people realize that they can't afford to wait any longer to sell, and they're desperate at that point. And again, not going into too many details because I'm not an expert in this stuff, but if you look into some of the research or some of the articles out there about, like, forbearance and such, there's mixed emotions and mixed information about forbearance. Like, forbearance, I just saw an article, I think, last week, where Fannie Mae, Freddie Mac backed mortgages are going to be allowing the person to let their payments go at the end of the loan. So they're not necessarily going to face foreclosure if they don't make up the payments at the time which they have to. So they're going to be basically granted the ability to delay the payments or extend that loan, whereas that might not have been the case if they didn't pass that law. So there's a lot of interesting things happening. It's the bottom line for me. It's like, unfortunately, it's not black and white totally. It's like a gray area as far as what's happening in the market. It's very weird and uncertain and confusing. That's my unfortunately,
And I just want to add to what Duck is saying, is that, a lot of people that were in deferments or forbearance when this first happened in March, are now going to be affected right now in June, July, and August, because that deferment of 3 months or that forbearance of 6 months, that's what it's really going to be impacted. Are they able to come up with those missing mortgage payments at the end or in June, whenever it was deferred? It's a 50-50, nobody knows. But if those investors are still cash poor, or the rents are not coming in, there's no choice, but there's going to be, unfortunately, foreclosures. So that's what's going to happen, where I feel as a lender and doing my research is going to be an inundated amount of properties coming up, from single families up to 4 units, multi-families, commercials being hit like mad, retail shopping centers. Unfortunately, I just heard, the American shopping mall, I forgot what it's called exactly. They got like $140 billion debt to some banks, and they can't even make their payments. But just going back to investing, everybody should know that, you always have to do your due diligence. Call us up as a lender. We'll let you know your economics and profit, your profit structure, and letting you know where the market trends are going. If you're looking to, seek Doug Beck's advice from a flipper, from an investor's perspective, you could call him up. Whatever he does with you, I'm not sure. He could work it out with you. So all here, everybody's discussing where the market's going. Nobody knows, but we know that stocks and bonds and 401s can diminish in seconds. You could have millions of dollars, thousands of dollars. You could lose it in seconds, not even days or weeks or months. But a property is tangible. It's there. It's never going to decrease by that much. And I will say that even during a recession, statistics show that rents stabilize. They just stay the same versus, like I said, stocks or bonds could diminish. So the worst case scenario, past the recessions, your rents will stabilize. Hopefully, once the recession is over, you could start to going back to increasing your rents to fair market rents and all that. I just want to add also that, thank God, our permanent financing has been added. We paused it for March and April, March and April, and we just opened it up right now in May. So we're back running for the permanent financing. Unfortunately, we're going to be at 65% leverage on a 1-to-4, whether it's a purchase or a refi. We like to have like a 700 score. Experience doesn't matter, but 65 leverage, whether it's a purchase or a refi, 1-to-4, permanent farm financing, whether you want to get out of hard money or you want to buy the property outright for cash flow reasons. So we're open, we're operating. The only thing that's on a pause right now is construction development for, a single family to multi-families. Because there's going to be so many properties out there that the demand for developing new properties is not right now in a demand. So that's why it's on a pause for now. So Max, if you want to open it up, because we got like 9 minutes left.
Yeah, so I want to open up to questions and answers, pretty much allowing everyone to, ask what's on your mind, what you're unsure of. There's no such thing as a bad question. So keep them coming. So I'll go ahead with the first one, Phil. This one's actually for you. This one came in a little bit ago from Dave Austin. So what is the percentage cost for a construction manager where the rehab and reno loan amount is a concern? Is it a fee that is paid separately or part of the rental loan?
You know what, we can, and everything's different. It depends also on, the participation of the investor, right? So if you want, let's say you want to have some involvement in the project itself. I mean, typically we're anywhere from, 10 to 20%, anywhere between that range on top of the actual cost. But I'll tell you that our cost, you're not going to be able to beat it, right? Some of the costs that I have with contractors that I use, so whether they be, subs or other GCs, owner operators, or the best. So, it could be, it's case by case, but, we'll have to look at it and we can, but it's in that 10 to 20% range. We can do it as a separate cost, or we can build it in as one fee, so we're not getting muddled up and confused about anything. So, we're open to to making it fit. Yeah,
I'll just add in there as working with Phil and as an owner and operator and such with their renovation projects. I would say since I've had Phil working with us, our cost has probably dropped by 7 to 10% at least, if not more, for the cost of construction. And so the fees that he charges for the time and effort that he puts in are very reasonable. And that would be the case, like, kind of Phil and I would come together with whoever is looking to have the assistance in their project and essentially put our team and our staff to work to help support, any clients that were looking for construction management. And you'd have both of us, one being Phil, who's got his tremendous amount of experience and also construction, but also in renovations, and myself, who's more focused on the renovation side as an owner and such, but also working with Phil directly and understanding the numbers of financials of renovation projects and such. So I think, the value is there. Like what Max was saying before about time, people have to measure the time, not just the money associated. But generally speaking, it could actually be less expensive from a direct cost and from an indirect cost in terms of your value of time and also your holding cost. I think it's very important to mention. Leverage doesn't come free. Leverage will come at a slight cost in terms of financial leverage, but your job as an investor, in my opinion, as an owner, is to leverage that correctly. No pun intended. Like, in other words, don't let your cost of money exceed, the benefit you're getting for being able to leverage it, and also the time of which you're able to leverage. In other words, if you're working with us, we're going to help you do multiple deals at once versus just doing one at a time, or possibly never doing a deal because you don't have the confidence necessarily. So I think that's worth mentioning for those that you're listening here, that are looking to either grow multiple deals at once or just do their first.
Phil, I have a question I'd like to ask you.
Sure.
Does it pay, because I've done this once or twice and it worked for me, where if you tell an investor, well, it's $200,000 to do the job and it's going to take me 6 months. Would you ever tell a client, or if a client did ask you, Phil, $200,000 over 6 months, how much would it cost to do the job in 3 months? So would you say that, okay, I'll do the job in 3 months, it's going to cost you X amount of dollars more? Have you ever been asked that question, and would you ever even do something like that?
Right. Yeah. No, I have. So, no, I have been asked that question. A lot of times what I'll do is, instead of, because I have so many different contractors and so many subs, right? There have been situations where I'll put multiple contractors on a job because at the end of the day, I'm working for the investor, right? I'm not necessarily, I don't want to say I'm not working for myself. Obviously, I do this to get paid. But I'm working in the benefit of the investor. So I'm already going to be thinking, okay, I'm going to get this done as quickly as possible, right? And a lot of times, if I can get it done quicker, what I'll do, and I've done this with Doug in the past, I'll say, okay, Doug will get however much money he needs. Let's use some hypotheticals, right? He needs $100,000, so he's going to borrow from you, right? Express Capital for construction. I said, okay, you're going to borrow $100,000. I'm going to do everything I can to get it done cheaper. And if I get it done cheaper, how about this? We're going to split the money, right? We're going to split whatever I save, because it's my job as a construction manager to save money, right? So let's say if I do it for $80,000, there's $20,000 left over. Hey, Doug, you keep 20, I keep 20. Instead of me being like Mr.
Yeah, 10 and 10, I think, right, Phil? On that.
Wait, Phil, you there?
Did you guys leave? You guys go off for a second. Sorry.
Yeah, so if there's just a finish Phil's sentence, in case he's 20K would be split basically 10 and 10. So we had a recent deal, I'll say, that we had $7,000 of savings and we split $3,500. So that put money back in my pocket. That paid for 2 mortgage payments for the hardmate lender for me, and they gave Phil a little bit of a benefit for saving us money.
Exactly.
The reason my question is, if a client has a $100,000 rehab and you tell them it's going to take 6 months for whatever reason, but sometimes I always ask my contractor, hey, I want you to finish in 3 months because I have an end buyer that wants to get in quickly, or I know that I could get this value if I sell it quickly, obviously post-COVID or pre-COVID. But the point is there an option for an investor to pay a little bit more for you to get out quicker? Because like I said, the cost of capital is cheaper, the carrying cost is cheaper, and maybe the investor needs to get, do this quickly for some reason. I just want to know if that's an option that you could tell these investors.
Yeah, I could certainly do that. Again, I could certainly, now the other people that I hire may not like it, but I could get 2 plumbers, 2 electricians working at the same time to get things done quicker. Yeah, I can absolutely. because we have the
Okay.
resources and
Right.
we have.
And sometimes, me as an investor, I'd rather spend a few dollars more getting out quicker because I'm knowing that I have an end buyer that wants to get out and I need to make my money. So I'm just trying to bring that out for investors to know that. Go ahead. I'm
In
sorry.
addition to that,
Mhm.
yeah, in addition to that, Marty, so I'll just say, if someone's coming in for example, with a hard money lender that's working off a draw schedule, I'll say from personal experience, sometimes, unfortunately, I've been the limiting factor as far as getting a project completed because of our draws not getting released quick enough. Not with Express Capital, but with other scenarios. So I want to make sure people know it's also about cash flow. So if you want to get a project done like half the time, it has to be where the money's flowing and the money's getting paid to the contractor, because the contractors that are showing up on the site need to get paid on a certain frequency. Just like, you want to get the property sold, they need to get paid and such. So I just think it's important for people to know, if you're working with a hard money lender, make sure you understand, and make sure if you work with us, we'll sit down and go through your construction draw schedule and make sure it's timed correctly with payments. As long as they're synergistic, it will run a lot smoother. Very important.
Gotcha. Good. And just to add what Doug is saying, by the way, Express Capital Financing, we have unlimited draws, and that's important because if you got a 50,000, 150,000, Phil doesn't want to wait, every 4 weeks to get paid. And like I said, the most important part of the job, of the deal, of the property is the contractor. So we came up with unlimited draws. You could pay them daily, weekly, or monthly. We don't ask for any invoices, no photos. Simple spreadsheet you fill in. I'm sure everybody knows there's an inspector that goes out, and we're also percentage based. So even though, Phil may say, okay, $10,000 is done on a $100,000 rehab, to him it's 10%, but to us it could be 20% complete, maybe even 30%. My inspector goes out there, he's doing a percentage based. So that's good to know for the investors as well too. And again, unlimited draws is very, very important. You're not limited at all to 4 draws. How am I going to do $25,000 and pay Phil in the next four months? Phil's going to freak out. My cost of capital went more money now. Not good. So we have unlimited draws, which is very important.
Yeah, that and you know what, that is very important to make sure that you always have cash flow to keep the job going is absolutely important. Yeah, you're right, Marty.
Right.
No question about it. Keeping projects moving is the name of the game. We don't get rich off of one project. We get rich off of being able to do this every single day, repeat it over and over again. And it's important to know. Now, I'll finish up with this one last question that we got in from JM, and I guess we'll, anyone who has an answer for him. So first off, he says, thank you for the content and the gold nuggets. Jay, thank you for attending and listening. We appreciate you. What's your recommendation for the area in New York, New Jersey, as far as investment potential is concerned in a post-pandemic environment?
Doug, you don't do anything in New York, right, Max? Max, you said New York?
New York and New Jersey.
Yeah, but still, go first, Marty.
Well, New York to us, it's still a hot market. It's not really affecting so much. So Bronx, Brooklyn, all the counties and all that, they're still strong. And unfortunately, the courthouses are closing. But I'm telling where my investors to go to find the properties, and they're finding them, and the prices are somewhat stable. But there's always great opportunity somewhere in that haystack.
Yeah, I'd just say, generally speaking, just be cautious. I'm sorry I wasn't on video, but I just got finally to where we were going. And hopefully you guys can see this. It's not a sunny day in Florida right now, but this is actually my father's house right behind me. So, yeah, I think in New Jersey, I would be very cautious with the high volatility, high turn type markets. And again, no disrespect to anybody who's investing there. You probably know better than I do, but be careful if you're a newer investor going into the urban markets like Newark, East Orange, Irvington, Patterson, Camden, Trenton. Those kind of markets are very tough in terms of not just the projects, but also the volatility. I think that you want more stability. You go into the better towns, and if you have to be a little more patient to get a good deal in the better town, I think you're better off, because kind of like what Phil was mentioning before, your clients from the perspective of construction, his clients in that they're still spending money, just like your clients in terms of flipping a house. Your end buyer is going to be spending money whether they have a job or not. They might have a cash reserves of hundreds of thousands of dollars or whatever amount of money to buy your property, and it's no judgment whatsoever, no discrimination whatsoever, but some people just don't have the capital because for whatever reason. And I think you're going to find that more your end buyers that are in tougher neighborhoods are going to be more difficult to work with. It's take longer to close, may not close at all. You have a high turnover. You could be totally done with a project like I've been done before with properties in Newark with 2 families, and then the buyer can't secure their financing because they've lost their job or something like that, or whatever it is. And that could happen in any market, really. But I think you'll see more of that in the higher purchase and higher sell volume markets, which are those, you look at the inventory, you look at Zillow, you look at Realtor.com, where there's the most red dots, the clusters are going to be the more, in my opinion, uncertain and less stable, unstable, if you would, markets. So be very careful with those markets. I can't speak to New York. We were going to buy a property in Staten Island. We actually ended up passing on that and give it to another investor. I can speak a little bit about Florida, but I'm not an expert yet, so I don't want to speak too much out of line there. Other than right now, it's a thunderstorm. So I have a couple projects going on in Florida, and I have one that I'm buying, hopefully closing on it tomorrow. But again, we're staying in the neighborhoods, not into the main house.
We lost him.
I think we lost you a little bit, Doug, but thank you so much for that answer. You know, obviously, yes, it's extremely important to really keep your finger on the market. You know, don't just, you know, take it from anyone, or do your homework. Look at what you're investing in. Look at where you're investing. Understand the market, how it works, what the absorption rate is, how many properties there sell. You know, there's a lot of news that's going out there every single day that can be translated in many different ways. Like, for example, CNBC today released some information that there was a surge of 54% of mortgage applications in the last 2 months. And, you know, while that's extremely good, and I'm very, very happy to hear that, honestly, as an investor myself, but it's also important to understand where those are happening, when those are happening. Are they just preparing themselves to buy? Are they actually buying now? And where all this is happening. So don't just take any piece of data. You know, dig as much as you can, learn about it, educate yourself. That's what we're here for. We're going to be consistently giving new content, new information that we can, you know, with other professionals such as Phil, Doug, and everybody else. So now, you know, I'm going to let everybody go. You know, we definitely had a lot of fun here tonight. But before we do, I just want to get it, you know, everyone's, you know, contact and where they can reach you. So Phil, if you don't mind, could you just tell everyone how they can reach you if they have any questions or if they want to get started with you?
Sure, absolutely. You can reach me. My email is phil@douglasjdevelopment.com. You can reach me there, or you can call me on my cell or text me. It's 862-226-9882.
Awesome. And just so you guys know, we're also going to email this to everybody tomorrow. So if you don't have a question tonight, you can call in tomorrow. We're going to email it to you. Doug, if you don't mind, could you share with them how they can reach you if they have any questions or they want to get involved?
Yeah, for sure. So I'll give you guys just a couple email. Hopefully I don't break any rules here, but a couple email addresses and phone numbers. So my direct information, the best way to reach me is doug@jdlventures.com. That's jdlventures.com. You could also reach my office team, which handles the development projects as well as construction management projects for other investors at office, OFFICE, office@douglasjdevelopment.com. And Phil just gave you his email, so you can also contact him with any questions about your project. And then lastly, I'll mention, if you're looking for wholesale deals or you're looking to understand how we can help you, you know, buy your next project and make sure you're making the right decisions and whatnot, you can also reach out to Rich in my office at the JDL team. Rich is rich@jdlventures.com. He handles a lot of our mentorship education as well as our wholesale operations as well. My best contact information as far as phone number is 908-448-2770. I don't have everybody's number memorized, but I'll tell you, Erin in my office, who handles a lot of the day-to-day logistics for the DJD, Douglas J Development operations, she's at 908-356-0110. And then Rich is at 908-648-3399. Phil gave you his number, I think, already. So I'm kind of impressed with myself to remember all those numbers. But
I was going to say, I don't know how you do all that. Maybe I just know them on my phone.
I just dialed them too many times and whatnot, so that's why, yeah.
I got
Appreciate
you.
And you know,
Mark, if you could just share with us how they could reach us if they have any questions or they have a deal that they want to pass through.
sure. So the website is expresscapitalfinancing.com. Our main office number is 718-285-0806. And if anybody needs my personal cell number to reach me, it is 347-348-0262. And I want to add something what Doug said. Since he is a major wholesaler, and I know that because I refer many clients to him on a weekly and a monthly basis. Also, like I said before, if you guys are looking to find properties, but you're looking for a new job, maybe you're looking to downsize, maybe you got to take care of an unfortunate death or situation due to COVID, why not spend a few dollars and use a wholesaler where he could find you the right property, or maybe he already has it already in his property listings, and then everything else you're utilizing him for. So a wholesaler is like a realtor without the realtor fee, I guess. But wholesaler, they're doing the jobs, they're finding the properties, they're analyzing the properties, they're coming up with the proficient scope of work, they're giving you the ARV, and now you got Phil there to do the contracting. So really using JDL Ventures as a one-stop shop, whether it's, wholesaling, the contracting, on the title, like he said. Hopefully you can utilize us for all types of lending, whether it's permanent or short-term. And I just want to say for all the folks out there too, we're able to get into properties for the inspections, for the appraisals. And if we can't, we will do a drive-by. Exterior, not a problem. And our drawers are not being slowed down. We heard other lenders have slowed down, stopped it. They're scared. I don't know what they're doing. We are not at all slowing down on our drawers at all. So we're here for you. We'll guide you, help you in any way possible. Give us a call. We'll analyze it for you. And then you can call Doug as a second opinion, third opinion, whatever you may need. We're here to help you scale your business. Don't be afraid, because there are going to be many, many deals. So don't procrastinate and wait for the next best deal. But at the same time, just do your due diligence, feel confident. And if you know what, if you lose or you don't make as much as you plan to, it's just a learning curve to get you the next deal into the next deal where you're going to be better. I'll tell you right now, like Doug said, he worked for Procter & Gamble, and now he's a major real estate investor. It took him time. He learned like everybody else did, and he got where he's at today. Yep. That's what's important to know in the real estate industry. So don't ever second guess yourself. Should I, can I, did I, could. I'm sorry. No, I just want to say, don't second guess yourself. Either commit, persistent, and do the deal, and make sure that just the numbers work. And as your lender, we're going to make sure, because we're just looking at the profits. I'm not looking at your credit score. I'm not looking at anything but the profits. If I see healthy profits, I'm going to lend you the money. And that's what we're there for.
Absolutely.
What do you want to say, Doug?
And if I could just add, I know we're a little bit over time, so I appreciate you guys. I want to say thank you from our whole staff. And also, I just want to give a couple more links. You gave a link to your website. I probably should have given a couple links out as well, which I could put into the chat box. If anyone here is looking for help understanding how to properly analyze and work on the deal and such, we do have what's called a 6-week accelerator that we're offering right now, which is a very modest cost or investment, if you would. It's 6 weeks for $6.99 normally. Anyone that mentions this meeting, because of Express Capital and the relationship we're looking to build, we'll take $100 off of that. And what that is going to get you sessions per week, every single week for 6 weeks to help you get started, to help you figure out what's broken in your business. That's through our Flip More Deals mentorship operation, which is just www.flipmoredeals.com. And that will help anyone here who's like, again, we just took on a number of clients in the past few weeks that are looking to mostly get started, but some of them are looking to scale up as well. I do want to mention also that we have the title company. So a quick plug for Investors First Title Agency, investorsfirsttitle.com. If you need help from a title insurance perspective, or you want us to look at a deed, my business partner, Ken McCarthy, can help you out there. And then Investors First Realty, we're helping folks from an agency perspective. That's not as applicable, although if you need some CMAs done, you want us to look at listing your property, our team can help you out there as well. So I just want to share this couple of links for everybody. And again, you feel free to reach out. I'm really good with text. I can pick up the phone and talk as well, but texting is really good. You guys have my number, 908-448-2770. Make sure you're using Express Capital if you're not already. These guys are legit. They're direct lenders. They know how to operate quickly and with the right, leverage, and making sure you're not getting into a bad deal. So kudos to Marty and Max for holding this meeting. Thank you for giving us the opportunity to work together.
My pleasure. Thank you so much. I just want to add to everybody before we end off. Also, my company is looking for in-house. We hear you, buddy. We hear you. I just want to add one more thing before we go. In order for you to make the commitment, in order for you to make the money, you got to call us. You got to call us, not just for the funding. We'll analyze the deal. We'll make sure that it's profitable, successful for you, and provide you those market trends and where the property is going towards. So you got to take the first step. Call us, email us, go to our website, look at the information. You want to make money, you got to make the next steps. Nobody's going to bring you there. And also, my company is hiring local in-house loan officers in New York and New Jersey. So if anybody wants information, please give us a call tomorrow. My direct number at the office is 718-535-7718. We provide back office support, training, business cards, brochures, providing you with an enhanced products and programs out there for you guys who are looking for a second income or a major income. We're not looking for brokers. I mean, brokers are welcome all day long, but we're looking for loan officers to train them and build up a pipeline of leads. So I want to thank everybody for joining. And if you have any more questions before we end off, anybody, Max?
Yeah, well, thank you guys, everyone, so much for attending.
Can't hear you, can't hear you, can't hear you, can't hear you. Max, can't hear you. Max,
You guys hear me
cannot
now?
hear you.
Okay, so thank you guys so much for coming. We definitely appreciate everyone. You guys hear me now? All right.
Yeah, we hear you.
Well, thank you guys so much for everyone for
Yeah,
attending. We're going to have another event coming up on June 2nd, Tuesday night. The topic will be announced shortly. You know where to find us. You can find us on meetup.com, expresscapitalfinancing.com, Facebook, Instagram. We'll get the word out to you. Just follow us. Let us know what you're interested in. If you have any topics you want us to discuss, we're always happy to hear your feedback. We're here for you at the end of the day. So the more you tell us, the more we're going to deliver what you're looking for. Again, thank you guys so much. Doug, Phil, Martin, thank you all for your time.